Let's look at asset allocation now. In very simple terms, asset allocation describes how you want to invest your savings across your lifespan. There are different parameters that you would normally use to decide on how much you need to split across the four different types of assets. The parameters range from how much risk you can take to how much risk do you need to take. What are your income sources? What is your financial strength now in terms of, say, your net worth, and so on. You need to ensure that you take just the required amount of risk to meet your financial goals. So how do you specify your asset allocation plan in iMyGoals? Let's look at how you can modify it. There we go. So on a blank plan, what you will see here are two endpoints that have been defined, one at age 25 and the other at age 65. What age 25 tells you is that you are interested in investing 70% of your savings in equity related investments, 30% in debt, and 0% in either gold or real estate. As you grow older, you would want to take lesser risk, and by the time you are 65 years old, you say that you want to invest 15% in equity, 35% in debt, 5% in gold, and the remaining in real estate. Now you can modify these points, and how do you modify is by specifying what is the split that you would like to have at a given age. And to do that, you need to add. So let's add for, say, age 35. Let's also assume that at that time you are married and you have kids. How do you arrive at this number? There are no common rules or formulae that you can apply. This depends on parameters like risks that you can take, that you need to take, your incomes, assets, and so on. The best way to do this is to just take an adequate amount of risk that is required to meet your goals. Some general guidelines include taking higher risk when you are young and in the early stages of your career, and reducing this risk as you become older in life. And when I say taking risk, it would mean allocating a bigger portion of your savings to riskier asset classes like equities, which are expected to give a better return than the other asset classes in the long term. Now, since you're 35 years old, one rule of thumb that you can use is 100 minus age, and that would tell you that you need to invest about 65% in equities and the remaining in the other classes. It is quite likely that you might not have any investments in real estate at this point in time, and that you would also like to keep your money in some safer places for your emergency needs or for your short-term investment needs. So you would choose, say, debt instruments like fixed deposits or mutual fund income schemes to park your savings that you need to get returns on in the next year or so. So let's say you decide to put 25% in debt and the remaining 10% in gold. You can see the chart changing. If you are comfortable, you can also use the handles provided here to modify your asset return. So it's very convenient for you to specify how you want your asset allocation to look like at a specific age. So let's save it. So as you see now you have added another point in your asset allocation. Similarly, you can add multiple points and decide on how you want to look. Say you want at the age of 50, you are married with kids and say dependents. You would prefer, say, only 40% to be in equity, 15% in debt, 10% in gold, and the remaining in real estate. And this could be because by then you expect to have bought a house or land which would have a value which is a significant part of your portfolio. So now that you've added 4 points, let's go back to the asset allocation screen to see how it looks like. So if you remember, we had added 2 points, one at age 35 and the other at age 50, and that has resulted in this pattern for you. So you can very quickly see that in the initial years around age 25 you have a big proportion of your savings going into equity, and as you progress down in line you are reducing your equity exposure and having a major portion of your savings and investments in other asset classes. A thing to note here is that this pattern would be different for different people based on their profiles, their risk taking abilities, their need to take risks, and so on. But what is important, as told earlier, is to arrive at the allocation which will help you meet all your goals. So that is how you can specify your asset allocation in iMyGoals.